record this. The purpose of this Zoom session is for us to go through mainly dollar index in order for us to determine our directional bias, say for the week, like our weekly forecasts on where we anticipate dollar index to trade to. So before I start, when I'm done with the look forecast, right, I'm gonna open the floor for like questions, and then if you've got an input or if you've got a question that you need to answer and that you need to ask, then you are welcome to ask question, and then we can attend to them. So first things first, how many of you guys here? Okay, I want to refer people with their names. The person on an iPhone, what name should we refer you to? The iPhone. Okay, I might ask him to unmute. Okay, I'm not sure whose iPhone. So looking ahead into the week in regards to dollar index, guys. Yes, of course, we've had Monday rallying a bit to the upside after a very strong move to the downside. But as we approach, say, New York session tomorrow, or even Wednesday New York session, it's very important that you put into consideration what happened last week, like the fundamentals that came out last week in regards to where dollar should be trading to. So with the CPI number, which is the first one, and then we had also the NFP report from the previous week, I think. Yeah, those two fundamentals have given us a clear directional bias on where dollar should be trading to. But that doesn't mean that we should also not look the other side. So as it is, if we are to talk of those numbers from CPI, dollar is likely to trade lower. So the forecast of this week is likely for dollar to trade below last week's low, right? Last week's low on dollar index would be preferred. Please try to make sure when you join in, your mic is on mute. Let me see, mute on entry. The lows of last week are likely to be a target in terms of draw on liquidity. So we are likely to see dollar most probably test the 131.76 price point, or to be precise, we're talking of 131.733. That is last week's low. So that will be the draw on liquidity. If you look at the price action of today is only Monday, right? With the Monday almost coming to a close in the next hour and a half, we have already seen how price action has signified that it wants to move lower, but of course we've had a retracement. This move lower to the downside, when you go on a hourly chart, you see it happened right around it's most probably the start of New York, 1400 hours. Dollar index dropped to the downside out of this consolidation here since the market opened, right? Now remember, elements to a trade setup. We are now linking the elements to a trade setup to the market conditions that we are in at the moment, right? We've had a lower CPI number, right? A lower CPI number, meaning inflation did come down though I think it's temporary. But in that sense of a softer CPI print, it gives leeway for the Federal Reserve not to be aggressive on their rate increase, right? An aggressive rate increase would have meant dollar might gain momentum. But now, with a soft print on the CPI, with CPI coming down, with inflation coming down from 9.1 to 8.5, if I'm not mistaken, that gives now leeway for the Federal Reserve not to be aggressive. So instead of looking at like 75 basis point rate increase, we're now looking at almost maybe even 25. But I think 50 basis points is what the market is forecasting right now for September 21. And take note, before September 21, we also have September 13, another CPI print. So with that in mind, leading to September 13, we should see a weaker dollar in anticipation of a soft print, a soft Federal Reserve rate hike, which will be bearish for the dollar, which is what they want in terms of fighting what? Inflation. So this was all confirmed by the CPI print and the NFP number that came out. We also had the producer price index. So this is now basically linking now the fundamentals to the calendar. So if we are expecting dollar to trade lower, right? This is Monday's price action where we had a breakout. So on H1, if I'm to go on H2, you can see here this impulsive move that broke out of Asian range and part of London session. If you see where that price originated, it's almost right at the equilibrium point of the range. This range here from market open today up until almost 2:30, start of New York session. Then we had a breakout. Now, what you need to understand now is to look for the order block that was left near or at the equilibrium point of the consolidation. This takes you back now to elements to a trade setup. Meaning, if we are to get a move to the downside, targeting last week's low, which is almost like a 153 pip move to the downside, if that's what we are expecting, we're expecting weakness in dollar. As from tomorrow, what you need to see is positive news for currency pairs like pound, euro, and negative news for the dollar, right? We've already seen dollar missing quite one of its targets. There was a fundamental for dollar here, this NY Empire State Manufacturing Index. It missed big time. Focus was 5.5, positive 5.5, but it came out negative 31.30. So going on into tomorrow's trading session, expect dollar to trade lower to the downside on negative news for the dollar, right? Or positive news for the euro. Positive news for the euro, they're coming in right around 11. We should get news for the euro, though I'm not sure if they'll be positive or negative. So if it's vice versa, if it's negative news for the euro, then dollar is gonna move to the upside. Okay, let me go to the dollar index. I was on the yen. Let me go to the dollar index. Bam, 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 bam. Right, dollar index control. Why? How come you guys you left me rambling while marking the wrong chart? Right. So this is dollar index, and price is now erased all the losses from last week Wednesday, right? When the CPI print came out, dollar has erased all those losses, meaning it has regained. But look where price is trading. It's just trading around the 106,400, just above 105, which is our very crucial support level. So we need a clear breakout from the 105, 106.50 for us to really see if we can test 107. But either as it may, for dollar, we should be hunting for price to trade below last week's low, right? Last week's low on dollar index is coming in at 104.510. This is the forecast, guys. We should see dollar trading to the downside. That is on negative news for the dollar, right? We should see dollar trade to the downside. But if we do break out of this consolidation here, you can see we've got a consolidation going on right now on the weekly chart, right? If we do get a breakout of that consolidation above 106.49, which is 106.50 institutional price point, then dollar should find resistance inside this weekly bearish order block, right? So right now, I would most probably suggest that we should be hunting for shorts on dollar index, but only those shorts must come from a premium level. I've already marked two premium levels. One, the weekly bearish order block, and then two, the 106.50, which is the top range of these bodies here. These last 4 weeks, the top range of that, when we talk of supply and demand, trading in a range. When price is right at the top of the range, we should be hunting for shorting opportunities on lower time frame. And you can see the moment you jump to the lowest time frame of our entry, H4, there you go. We've got a bearish order block. Dollar should find a bit of resistance inside this level here, the 106.50. If that level does not hold, guys, then price will likely look for internal range liquidity right up here, up around, let me just get the proper price, up around 106.83. We've got internal range liquidity there. Then you expect dollar to run some stops, buy stops above 106.83 before it starts coming to the downside. So expect the high of the week to come in tomorrow on dollar index before we start a move to the downside, targeting this level here, which is the 104.50. The 104.50, that will be the target for this week's forecast. So yeah, expect dollar to be under a bit of pressure, especially on bad numbers, which is highly likely. Of course, the American economy is not doing that well. The CPI came down only because of energy going down also, but in terms of other industry of the economy, they're not really doing that well. So you need to look at things like the building permits coming in at 2:30 tomorrow, or this German ZEW current economic sentiment, which is going to be either positive or negative for the euro. Then you know how to react when you go to the dollar, right? You know how to react. If it's negative news for the euro, then dollar should sweep through 106.50 and target 106.83. But if it's negative news for the euro, if it's positive news for the euro, then dollar should find resistance at 106.50 or even at 106.83. It depends now on where price action is as we get the numbers of those fundamentals. So it depends what the number is and where price action is. And then looking ahead to Wednesday, remember the bulk of the weekly range is formed between Monday and Wednesday. And the move that we saw today in the markets most probably has highlighted the weekly range. So we should see price probably trading back to the downside because it has moved quite massively today. If you go to the daily, this is a very huge move. And when the daily candle close, there's going to be a liquidity void there. You see, there's going to be a liquidity void from Friday's high to the opening price of Tuesday, right? There's going to be a liquidity void there. So looking ahead to Wednesday, we've got also what news do we have? Looking ahead to Wednesday. Wednesday, we've got RBNZ, right, decision. Of course, these guys are on a very aggressive hike. So 3% is the target. And then we also have CPI for the pound. And then we've got GDP for the euro. And then we've got core retail sales for the dollar. These are going to be crucial now in terms of dollar's weekly range formation. Negative retail sales, then dollar will turn lower, which is highly likely. We might get a negative number on the core retail sales, or even on both core retail sales and retail sales for month on month. So yeah, that's pretty much what I wanted to highlight with you guys to say, okay, we should be looking for a weaker dollar in this week's price action, but that does not disregard you looking at the other way around, also looking for longs from discount. You see, because once today's candle is closed, once today's candle comes to
meeting school to
once once today's candle is closed and then Tuesday candle opens, then you are going to get a liquidity void there. That liquidity void and fair value gap is going to offer you great opportunities for longs on positive news for the dollar. You see, once the void is filled, once the gap is filled, if we do get positive retail numbers, then dollar should still continue with its momentum to the upside. So yeah, that's what I wanted to illustrate. And your assignment for tonight, make sure you do your price action analysis properly. Highlight your institutional order flow on dollar index so that once you get a catalyst or a fundamental or a high impact news, you won't make a rash decision, but you know exactly where price is in relation to the order flow that you'd have done. I'm going to do another focused right now, a proper one, highlighting the institutional order flow, and then I'll upload the video for you guys. So yeah, that's pretty much what I wanted to share with you. And now for the questions. I'm going to start with you, Leroy. I'm going to start with you. If you have any questions, because we've got like maybe 6-7 minutes left. Do you have any questions?
Yeah, so far.
Yeah.
So far, no question.
No questions. Okay, and then we're gonna come to Jerome. Jerome, do you have any questions? Any questions? Doesn't really have to be. Doesn't really have to be regarding dollar, but questions.
Okay, just a small technical one. The rounding of the calibration, is it the first two after the decimal or the last two?
Right. It depends. Let's say you're looking at say the dollar, right? The dollar has got 3 decimal places.
Yeah.
Yeah. On those 3 decimal places, you need to focus mainly on the 0.10, 0.0, no, 0.00, 0.10, 0.50, and 0.80.
Yeah, but what I'm asking is which numbers after the decimal do you look at? Is it the last two or the first two?
The first two, that is on dollar. You see,
only on dollar.
You see, dollar has got 3 decimal places, right?
Okay.
If you also look at the yen pairs, they've got 3 decimal places. But if you look at, say, Euro USD has got 1, 2, 3, 5 decimal places.
Okay.
So the number that you round off on Euro USD, those that have got 5 decimal places, you round off the second number from the last. You see?
Okay. Yeah.
And then on the yen pairs, you round off the middle number. You see? So for instance, we've got 120.190. That will round off to 120.20.
20. Okay, sir.
Yeah.
Now I understand.
Okay. Then who's next in line? Okay. The rest have got their mics on mute, but I'm just gonna ask Chipo if you have any questions.
No, I don't have, sir.
Okay, that's fine then. And then who else do we have here? iPhone. The person on an iPhone. I don't know who's this guy, so it's very rude for me to call someone iPhone. I wish I knew who it was. So yeah, I don't. Who else here? Who else? Taffy, if you can hear me, do you have any questions, bro?
No questions. Yeah, I'm satisfied with what you showed us. Yeah.
Okay. Towers, do you have any questions?
No, sir.
Right. Who's again? Mr. Robert. Mr. Robert, do you have any questions? Okay, I guess that's a no. And then Mr. Eddie.
What do you think on Euro? It's Euro. Euro. It's, let me check the page.
We've got like.
I get here late, man. So,
yeah, time is running out. Which page do you want us to check?
What's it called?
Euro GBP. Yeah, let's check Euro GBP.
Euro GBP. Hey, that one's gonna be difficult to trade, eh? I'm not gonna lie to you. It's gonna be very difficult this quarter. So from a monthly point of view, of course, we've got our monthly bearish order block there. I'm just gonna do a rough 18, 22, 18, 9 to 18 a month. 9 to 18 a month is right here.
If we are good with that word,
So looking at our 9 to 18 month profile, right? Of course, we're expecting euro to be under huge pressure, but so is the dollar. So with dollar under pressure, then you expect a bit of recovery in euro, but there's nothing really to justify a recovery on the euro at this moment in time. So that's why it's going to be very hard. So looking at the 9 to 18 month profile, you can see price has been really struggling to like break into a clear bias. Though last month did show us that price really wants to go to the downside, but we might have created a new high. Okay, those are relatively equal highs. You see, that means we haven't created a new high, but we created this low here. So since this low here, price hasn't. Okay, let me just get rid of this here. So you can clearly see we've got a range that we are working in with, and price has been trapped inside this range for quite a while, right? Yeah. So inside this range here, this is our high, range low, range high. I'm just gonna grab my fib. Now with my fib 2, I just need to highlight the equilibrium point, right? So looking at this is our premium and this is our discount for the range, right? For the monthly range. And then what we can do, I'm just trying to come up with a bias here of where exactly is price in relation to what's happening in the market. So the equilibrium point of our premium range is coming in right inside this monthly bearish order block. And then we've got the discount. Take note, guys, this is now a rough sketch. This is what you must do roughly when you're looking at a currency pair that you haven't looked at. You're just breaking down the structure into segments. Of course, 0.48577. That's the equilibrium point of the monthly range. But this monthly range has got two segments, the one with the premium and the discount, but there's also an equilibrium point. So right now, price is way below the equilibrium point on our monthly range, meaning looking for shorts is going to be very tough because you can see price is bearish. Euro is under big pressure. So, and when we go to the weekly chart, right? Remember the gray shaded area is our monthly bearish order block. On the weekly chart, we've got this weekly bullish order block here where price found support in the recent weeks, and price bounced to the upside. To the upside, above equilibrium, it found resistance inside the weekly bearish order block. So now price is dropping down now. We are now just below the equilibrium point, meaning we are now in the upper range of our discount zone, right? So for you to be a buyer in Euro GBP, you need price to be well below 0.8337. Right now, it does not hurt to be a seller, but with price above 0.84577. You can see here now on the daily chart, this range here, okay, this is above equilibrium, right? Which is the premium range. This is our premium range on the monthly chart. Let me do this. Let me zoom out and push this back out. Don't know if it's gonna. Let me just move this here, and then this one up there. See the big shaded area, the gray shaded area, the big one. That's our premium range, but on the lower side, above 0.8585. It's our premium range, but above the equilibrium. So you can see how price has found resistance inside this premium area here for liquidity void. Price shoot up on Friday, ran internal range liquidity inside the fair value gap, and then today it continued with the drop. So the drop is likely to continue on negative news for the euro and on positive news for the pound. Where is it going to trade to? The right to this imbalance here, to this market inefficiency. This is your target for shorting opportunities. But it's very, I think it's most important that you target your shorts well closer to 0.84577 on negative news for the euro. Once you get negative news for the euro when price is right here or above the equilibrium point, then you are shorting it with a target of filling up this this liquidity void here on the daily time frame. So yeah, I would really say shorts are ideal on Euro GBP. So you can break down the structure as you go to the lowest time frame, which is going to be H4. You can see on H4 you've got that bearish order block right here. Though it's not really high probability. Remember, we need the order block followed with a fair value gap. Though it's not much of a high probability hobby, but still it should offer you opportunities for shorting inside this range here. Yeah. So somewhere around also 0.84470 is ideal to be a seller there. Yeah, on negative news for the euro or positive news for the pound. Yeah, positive news for the pound. I think we've got on the calendar tomorrow we've got pound tomorrow 8 a.m. You see, 8 a.m. tomorrow we've got pound news, and then 11 a.m. we've got euro news. So those levels that I've highlighted, I think they should offer opportunities to participate in the market depending on how the news has come out. Yeah, that was just that was just a rough run through of what I think will happen. So I think Euro GBP, Euro is still under huge pressure right now. So I think shorts are ideal. I think we're gonna see a very huge big bearish candle that is gonna fill up this liquidity void here on the daily time frame. So most probably 0.8333 can be your weekly target, though it might be a bit far. Maybe it can be a target up until maybe next week.
Okay.
Yeah.
Okay. Yeah, I have an entry there, so I wanted to gain confidence to hold or to close.
So So you think what I say gives you confidence? What if I'm also talking the wrong thing?
Yeah, of that opinion, we had the same opinion, so I have confidence.
Okay, no, that's good. That's good. Right. We've got 4 minutes left. I don't know if there's any other one with a question. Who did I skip here? Taku. Tafi. No, Tafi, we spoke. Taku. Hey, these guys, they confuse me now, the brothers. Taku, do you have any questions?
I only have one question.
Yes, my brother. What's up?
I'm good. So judging from what happened this early morning when I was selling, let me also rephrase myself. When I was selling Euro USD, I don't know what actually happened, but I just like took my chances because I saw that Euro is in power USD. I don't know what happened. Like trying to link my analysis and my news, and I was in profit with like $22. But I understand that I was in profit, but like the way I do it, it was just a guessing work using the news. So I don't know if you can maybe clarify or try to show me something.
You see, what really happened today in the market was all because of the numbers that came out from China. You see, the numbers that came out from China did put pressure on the markets today. That's why you see we had this. It's very rare to get a Monday that expands this much on Euro USD. It's very rare to get 100 pip or 120 pip expansion on a Monday at a time when also Italy is on holiday. So I wouldn't really say it was guesswork or what. It was just probably by luck, because normally we need to wait for Monday's range. So this move that happened in the markets today, it was all because of the fundamentals that came out of China. That's why dollar did gain quite a big move to the upside, and the currency pairs dropped. You see. So I wouldn't really say your guesswork was wrong or right, but even me, I wouldn't have known when those Chinese
So
news came out.
it's just something that just happened.
No. The news from China. You see the news that came out at 4. You see those industrial production from China. If you look at the calendar, those were the big
But that's what I
catalysts.
used. That's what I used.
Oh, then it wasn't by chance. You see, you didn't take that trade by chance. You used a negative news from China for shorting euro against dollar, because dollar will gain if there's negative news from China. Dollar is gonna gain its value. You understand that part?
Yeah, I get your point. Thank you.
Yeah. So the moves that happen today, guys, they don't happen that often. You must take note of that. They don't happen that often. So if you were trading today, which I don't usually advise, the 7 a.m. H4 candle, the candle that opens at 7 a.m. is crucial to price action for the whole day. You can see on euro, that's the one that gave birth to the whole expansion which we have seen, where the redistribution on euro somewhere around New York session, there was a bit of redistribution, and then market continued. You can see the same thing happened on pound USD, and also on USD CHF, and on AUD USD. That 7 a.m. candle, especially on H4, the H4 7 a.m. candle is crucial to your daily expansion move. So I think that's pretty much about it. I'm going to upload the video and record also another video with detailed analysis of dollar index. So thank you guys for joining, and I wish you good luck in your trading.
Thank you.
Thank you.
All right, guys.